What's up, guys? Welcome back to another episode of The Lowdown, where we talk business and all things real estate. I don't know about you guys, but I'm tired of the guys having all the spotlight. So I'm very excited to bring on a badass woman, Addie Ning. She just closed on a 12-unit apartment building. So Addie, I don't want to steal your thunder, but welcome to the show.
Thank you. Thanks for having me on your show. Excited.
Of course. Maybe we could start with what does your rental portfolio currently look like?
We started in 19. We started our real estate investing business. We bought a condo back then, and then we also bought three other places out of state. That was when we first started purchasing out of state in Michigan. But we actually recently sold three of them this year. So we sold our San Diego condo in May. And then we sold two single family homes in Michigan. So now we have a quadplex in Michigan. And my husband also has a property also in San Diego, near UC San Diego. Yeah, it's like a college property.
Okay. Just to sum it up, you have a fourplex out of state. You have a single condo in San Diego. You're currently just closed on a 12-unit in Indy, and you also have a primary residence.
Yep, just closed in the 12-unit property on the 4th of November. So
Awesome.
just a couple weeks
Congratulations.
ago. Thank you.
Awesome. Everything that you showed right now definitely shows that you have some validity to everything that you're saying. So maybe we can go back even further. What did you do before real estate?
Yeah, so I went straight into biotech right out of college. I started with an internship at a pharma company in Southern California, and then I just went straight into biotech. So worked in clinical trials, clinical operations, and then most recently was a program manager at a very large biotech firm, and recently got laid off actually in April of this year. So my last day was in early June. So that's kind of my background. So I've been doing it for like more than a third of my life. So it's pretty crazy and a pretty big change to pivot from that to full-time real estate investing.
Yeah. Did you ever imagine that 5 years ago you'd be in the place that you are now, where you're doing full-time real estate investing, closing on a 12-unit apartment building?
No, I mean, so my husband and I really wanted to have passive income. We've always wanted to, and he's actually the one that taught me a lot about that and not fully relying on your W-2 job. W-2 as a 9 to 5 for anyone doesn't know. So we've always been really passionate about having passive income and starting some type of side hustle. So that's why in 2019, we started investing in real estate because I actually saw my husband's family do it. They weren't really the traditional 9 to 5 type as his family. So I saw that entrepreneurial side and I got pretty inspired. So that's when we started, back when we purchased our San Diego condo. And I thought we would just continue doing it on the side, honestly. But when I got laid off from my job, it was kind of just like, what a perfect opportunity to pivot to something we had already started and just go full time into it and really see how it goes and grow the business.
Well, I'm a firm believer in everything happens for a reason. And so I think that getting laid off was kind of a big blessing in disguise, whether you realize it now or later. And you guys are killing it. You just closed on that property. So that's amazing. Are there any skills that you think transferred from biotech to real estate that you may or may not have known?
I think just the people, working with people, like with many jobs. I mean, I worked with probably 40 to 50 people a day. And so I'm a people person. I really like interacting with people and talking to people. I can't really be the type of person that sits at a desk all day and not really talk to people. So I really enjoyed that part about my job actually, and going into the office and getting coffee with people. And so a lot of those aspects actually are similar to real estate because real estate is such a people career. You really can't do it on your own. You have to have a community. You have to have the people looking out for your best interests so that you can really scale and run your business successfully.
Yeah, I agree completely. Real estate's all about relationships and all about nurturing them and building them. And I don't think you can do everything alone because eventually everyone obviously runs out of money also. aside from just like the mental capacity to do things also. Maybe we could walk through your very first deal. You said that the first one you bought was, you said the out-of-state one or the condo in San
The
Diego?
first one is in San Diego. Yeah. So yeah, that one was our very first one. We had an agent that we were pretty good friends with send it to us. And my husband's had a couple friends that actually use that agent as well. And so we didn't even run the numbers on that one. Like, we didn't really know how to go too deep, into detail with that stuff. But we had looked at so many or listened to so many podcasts on Bigger Pockets, just watched countless videos about how to find a good deal. And so we purchased this condo as an Airbnb, but the HOA only allowed it to be a midterm rental. So, I mean, ideally it would be a short-term rental, but we thought it would be fine being that San Diego is a vacation spot and it was also close to the convention center and Petco Park, which is the baseball field. So a lot of people who like watching the Padres or going to Comic-Con for the convention, we thought it would be a really good location for that. So we kind of like lightly ran the numbers, not really into detail, but we just bought it. And we bought high, I would say. I don't think we knew that we were buying high at the time, but it just so happened it ended up being high. And then the HOA was kind of what killed us because it went from like $645, I think, to over $800 a month. And that's kind of how HOAs go. They just, they always go up. They never go down. And my husband was running it at the time on the side. We were both working 2 jobs and he was really hustling and trying to get tenants in, trying to book people out so that there were, those minimal days in between stays. But even doing that, it was just breaking even. And San Diego is an appreciating area, but I wouldn't say it's as much of an appreciating area as we wanted because we bought high and then we were kind of monitoring the market over time. My husband was putting in so many hours into responding to people and adjusting prices and things. And then we just decided in May, that it was our first one and, we learned a lot from it and how to run kind of a hospitality aspect of the business and that we'd rather put our money somewhere else and invest in something with a higher appreciation or have higher cash flow.
Yeah. Well, I really commend you on obviously just taking action. I think that's the most important thing to do. And I think a lot of people just stuck in the analysis paralysis stage. And so you guys did some calculated risk. You listen to a lot of podcasts and things like that. But I think a lot of people just getting stuck in the numbers and just like wondering what if all these different things go wrong. And so, like you said, going through the motions and just taking action and just learning everything from the first one is always the most important thing. Whether you break even or lose money, whatever, it gives you the confidence to move forward to the next one. And so let's go talk about the second one. So the second one, you decided to choose out of state. What made you choose out of state versus in California?
Well, 2020 was the pandemic. So we were nonstop listening to podcasts. That's all we had to do. I mean, we just kept listening to so many podcasts. And I think there was this Bigger Pockets challenge to just purchase a property in 90 days. And it was like, just do it.
I love it.
And so we literally just like picked Detroit, Michigan because it was a great price point. We ended up finding a really good real estate agent out there who was investor friendly and just had really good communication. And so it just made it easy. And so we just did it. We just followed that challenge and we bought a property out there. It was only $95K. It's kind of outside of Detroit, like in the suburbs. And yeah, that was a single family home, like bungalow. And that one, I would say, it was kind of C-class tenants over there. And we learned a lot. I think I learned a lot about property management, how to really screen our next property manager because we had a lot of hiccups with our property manager and even trying to sell the place recently. We just closed on it in October, and then just, the tenant up and left recently, I think in August. And so, you kind of get what you pay for because it was a very low price point, but it was cash flowing a bit. So that was great, but it wasn't as much as we had wanted. I think initially we had calculated at least over a 10% cash flow, cash on cash return. But with all the maintenance requests and things breaking and then the tenants being late on rent, it just ended up being a lower return. That was kind of another lessons learned, just to really budget what, the work orders that the property manager is sending in, and to not just approve all of them at once.
Hmm.
Because at the same time, I wanted to make sure the tenant was comfortable, but we also need to budget, the amount of maintenance we're spending.
Did you ever go and see the property before you bought it, or was it just like all sight unseen, just from your agent videotaping it, like a walkthrough?
Yeah, it was all sight unseen. And the reason, going back to your question about why we chose out of state, is just because, it's very expensive in California, and it would just take us a while to save up for something in California. And also, we wanted something landlord friendly.
Yeah, I agree completely. I mean, there's so many tenant laws or tenant protections, I should say, in California that make it kind of a nightmare for any kind of bad tenant. I have not purchased anything out of state yet, so that kind of scares me, to be honest. But I feel like after you do something like out of state, that can open up so many more options for you, which it did. So, what was so you eventually go to multifamily, small multifamily, and that was also, you said, in that area, or was it somewhere else?
It was in a similar area. It's also on the outskirts of Detroit, and that was a quadplex. And that one, I think, is one of our favorite purchases. It's in a B class area, so it's a little bit of a better area. And we still kept it, even though we sold three of them. We're selling three of them this year, but we're still going to keep the quad. The tenants have been there for a really long time, and they pay rent on time, most of the time on time. Like if they're late, they pay a late fee, but they usually pay rent consistently. And other than like a few maintenance type requests, like there were some rodents recently, that one is a pretty good property, I would say.
Nice. Was that fourplex? Was it turnkey, or was it like a value add opportunity?
So, yeah, that's the thing that when we first started purchasing investment properties, we didn't really know anything about value add. Like I wouldn't say it was turnkey, but it would already had tenants in. So it
Okay.
was in livable condition, and we didn't do any type of major value add. We did, like, the maintenance that it needed.
And so you inherited all four tenants that the previous owner had,
Yeah, yeah, it's still the same tenants right now.
and it was cash flowing day one.
Yeah.
Nice. That's awesome.
Yeah, we also purchased it in cash, so that
Okay.
that helped.
What was the biggest differences, or would you say, from like just a single family home going to a 4 unit?
I would say just it was pretty much the same, just kind of managing, more tenants rather than one. I'm pretty sure the tenants know each other pretty well, because they're in the same building. So I don't know if it helps to have that relationship, with the other tenants that lived in the other units, but that one it just hasn't given us as many problems as the first single family we purchased in that area. I think it's because it's a better area overall. But as far as like the operations of it, it seemed very similar. If something breaks, it's in one unit, and then, we recently raised the rent slightly, so we tried to make the rent similar across all four units. But, I think one of them might be paying a little bit less, but, it just depends on the circumstance.
Well, I'm happy to hear that everything has been going good with the fourplex. I
Thank
think
you.
things can always go wrong. It's great that you've been having such great stuff. So maybe let's go into now the big one, the 12 unit. It's a much bigger project. So maybe we can talk about how you found that one and then the numbers about it.
So I recently joined a coaching program called Zen Coast University.
Shout out to Zen Coast.
Shout out to Zen Coast. I joined that in May because to me, I was like, okay, I can either do this self-employment thing on my own, which we already have a foundation for it, so I could, or I can do it faster with someone's help who's already done it, like done what I want to get to, basically. And so that's why I joined a coaching program. And I really am happy that I joined it. I mean, both of us are in it as well. And I think I've really benefited from investing in myself, which I was kind of torn whether to do originally, but I'm really glad I did it. But anyway, through that coaching program, somebody actually texted me the opportunity because they knew I was looking in Indianapolis, Indiana. So I had been looking for commercial deals right when I started actually in the coaching program. And it was just so frustrating because they wouldn't respond. It's also like a very male dominated industry, the commercial. So it was just frustrating. So I pivoted back to residential. But then it wasn't until this, the student sent me the listing, or it wasn't the listing, it was like a text about this property. And so yeah, I looked into it, I ran the numbers and got the information from the broker. And yeah, it ended up working out. Asked a ton of questions to my coach about it, but ended up submitting an LOI, which is a letter of intent or an offer for a commercial property. And didn't really know exactly what I was doing, but ended up getting picked and getting our offer accepted.
That's amazing. Again, it comes back to taking action. I think that's the most important thing for success, taking a little bit of calculated risk and taking action. How did you get into a good relationship with a broker? Because especially out of state, I think a lot of brokers just try and focus on people who they know in the area and stuff like that. So do you think having someone who knew the broker was a big advantage?
I think the person who sent me this listing actually was connected very well to the broker. And I think the broker knew that we had this real estate community. And so I think that helped. Yeah, but I actually didn't have a personal relationship with before we started talking about this specific deal.
Well, all comes back to relationships and just who you know for sure. What are some of the numbers for the property? What did you get it for? Did you use all the money yourself? What kind of loan did you get? All this different stuff.
So the purchase price was interesting because I know everyone has kind of different thoughts of what price that they'll offer. And it's very different from residential because residential is all based on comps and like what the properties next door or across the street have sold for. And, depending on those prices, it could drive the price of the property that you're looking at up. But with commercial, it's all based on cap rates, which I was learning about. And, there are comparables, but it's not really the same. It really depends on the amount of income and revenue that the investment property brings. Because with commercial, it's all about the numbers, and if it brings enough revenue, it's not as much of a emotional game as much as residential is, because that's more of your could be your home that you're buying for your family.
Mm-hmm.
And so I ended up talking to a family member who's in the who's a developer actually about the price, because I know that the broker had told me initially that the seller wanted it for 2, maybe possibly 1.3, and that he was thinking of um, listing it on the MLS at 1.3 or 1.25 or something. And so
Mm-hmm.
I kind of already knew like the quote unquote whisper price. But when I had run the numbers, obviously it looked better lower than that. And so that particular family member that I had talked to mentioned that, you should just offer what they want, because otherwise you're never going to get that opportunity. If you offer low, they're not going to accept it, and then you're never going to get this opportunity. And so I thought that was really good advice. And I know everyone has different ways of doing it. Some people want to stay in the commercial space and keep that relationship, and they don't want to have to retrade later on. And I understand that point of view as well. But I ended up offering 1.2.
Okay.
And there was another offer apparently. I don't know what it was, but I ended up getting it, I'm guessing because my offer was stronger.
Got it. Well, that's crazy. 1.2 for a 12-unit apartment building, because 1.2 here in the Bay Area gets you just like 1,000 square foot house. So I think going out of state is the way to go, especially if you're trying to get into the multifamily space. Do you plan to do value add to this particular property? Do you have to do renovations? lower expenses? What do you plan to do?
So right now, I'm just getting into it and getting into the operations, but over the span of 5 years, because my loan, that's the thing with commercial loans, they're shorter periods, like 5, 7, and 9 years. So my particular loan is a 5-year term. So I plan to kind of get the operations in order first, the first few months, and then probably around year 2 is when I'm going to renovate. So 10 out of the 12 units are unrenovated. 2 of them are renovated and look pretty nice. I saw the 2-bedroom renovated one in person when I was there in Indianapolis. So I've already gotten quotes from a contractor to renovate the other 10 units. And so I plan to renovate them over time, kind of in a staggered approach, just to avoid a bunch of vacancy.
Hmm.
And then, bring up the value slowly and then either sell or refinance depending on the market conditions at year 5.
Got it. Do you have any partners on this deal, or are you doing it all by yourself?
So I have 5 limited partners that have invested into this deal, and that was like the hardest part of this whole thing of raising capital. This is something that was new to me and that I just didn't know how to do. I don't know if you've raised money before, but I had no idea what I was doing when I was going into it.
I've raised one from one investor who happened to be my mom. Shout out to my mom. So that wasn't a very hard pitch, to be honest. But yeah, I was involved in your pitch, I guess, pitch meeting with some other investors. But I think you did a really good job. You had a couple of different people who came on. You had all these slides set up. What were some of the biggest takeaways or learning lessons from your experience from raising capital?
I think, when I first started, I was just like, I didn't know what I was doing. What it came down to is like, you're really trying to make someone feel comfortable with you and just trusting in you. And I realized over time that, a lot of people didn't know I was even in real estate investing. And then when I would tell them and then I would, go into this deal, they'd be like, "Oh, I didn't even know you were doing this." And so that's kind of when I started thinking, "Oh, I should really make it more known that I'm a real estate investor," because you kind of have to tell them all your background and then get into the deal. And if they don't trust you from the beginning, they're not going to even really care about the deal itself. But what it came down to, it's a sales pitch. I mean,
Hmm.
essentially, because you're trying to convince someone to invest their hard-earned money into your deal, and how are you going to make them comfortable with that? For me, I just reached out to my circle of friends, and at first I thought it was going to be easy, but it turned out to be a lot more difficult than I thought. I even had to reach out to my dad in the end, who said no, by the way, because he's a stock guy. But it's really just making people comfortable and having confidence in your deal and your numbers. Because if you don't have confidence and even a slight ounce of worry or concern, your, potential investors aren't going to invest with you. And so I really had to be confident in my numbers and make sure I had that I knew that, this property was a good deal, and then portray that confidence to my investors. And it took a lot of time. I probably started too early, to be honest, to raise capital, because there's a lot of legal documents I had to put together behind the scenes. And that took a while to finalize too. But in the end, somehow I pulled through and managed to get 5 LPs.
Well, I'm really, really proud of you. I know it's not an easy thing to do. So now you'll have the confidence to do it. Maybe you can raise $2 million. I think this is just
Mhm.
what you needed. How much did you have to raise?
So in the end, I actually thought I would be able to put down 25%. And the lender, like, it was pretty last minute when they told me I had to put down close to 30%. So I ended up raising 175K, and then my husband and I put down the rest.
It's one thing that you could teach people here is that some people think that when you're trying to raise money, you're begging them for help, right? But instead, like we've learned, you're giving an opportunity for them. It's a win-win situation for both of us. You're giving them an opportunity to invest in real estate, this thing that they may not have been able to do otherwise. They're able to get much better returns than the money that's probably sitting in their regular savings account that's earning 0.00001%. And so I think you just have to have that mentality and confidence, like you said.
Yeah. And that's what I was trying to get my message across as that, and some of my friends, they want to learn real estate investing and they just don't have the time. And so I did really bring that up as in, I can take you along for the ride with me and show you how it's done. I can give you the information that you want to kind of learn. Just take a dive into real estate investing kind of on the passive side. And that was the thing is that, some people are more stock people. They're just more comfortable with stocks. And so it just depends on people's risk tolerance and just their comfort in general with what they'd invest their money in. So I think it's personal preference.
And going back to your point about having people have confidence in you, I always tell people also, you got to really post things on social media, the things that you're doing, because your social media nowadays is honestly your resume. And so whether you have done your first deal or not, just start posting to do the things that you're doing day to day. It doesn't even have to be until you get your first deal, because if you're just showing the grind, it's a lot more relatable than someone who, if you wait till you have like 100 units and then people are like, oh, well, that's not going to happen for me. And so I think that, just like you said, just start trying to post regularly so that you don't have to have those conversations with people about like, oh, what are you doing? Like, I didn't even know you're doing this.
That is something I learned very recently, to create a social media account for investing and showing my progress along the way.
And now you're on the podcast. So you could share the podcast with everyone.
Yeah. Yeah, it's a great way to get the info out there and show people what I'm doing. And there was someone I was following too that, I think she wakes up every day just starting her day with her pitch every morning. And it's like, what do you do? And that, like, when someone asks you what you do, it's like, that's an opportunity to say, like, I'm a full-time real estate investor. I'm investing in this deal that gives you X returns. So I also started doing that when I was raising capital really actively.
How has your mindset changed from the very first San Diego deal to now?
Well, I think I was probably a little bit too optimistic when I was starting, that I thought it was, I thought that we would just be able to retire quickly but I now realizing that real estate is really a long-term game because the returns happen, over months, years, and then eventually it's exponential growth. But you really have to wait, you have to take action, like you said, but you also, it could take a few years. And I think that was probably a little bit of naivete, whatever, however you say that word, in the beginning when we first started.
Yeah, I agree. Real estate, it's a long-term game. And I always pray and hope that it's a get rich quick thing, but it's obviously not. What advice would you give to someone, say their spouse isn't in real estate, but you want to get them into it? Like you said, you weren't in real estate in the beginning. How did your husband get your interest into it? Or what would you advise someone who wants to get their partner on board with it?
I would just say that I think I always like hearing other points of view. There's one perspective where you work the W-2, for years and years and years. And I would have probably done that if I didn't marry my husband, honestly, because I saw my parents doing that as well. And I thought it was very secure. I'm just going to work this job till I'm who knows how old. But eventually, it kind of weighs on you. And especially because we started a family, it didn't give me the flexibility I really needed to be with my family. So once my husband started mentioning, side hustle and investing and passive income, that really spoke to me because I wanted that time back and that flexibility for my family. And I think if you don't have that flexibility, that's kind of when you kind of crave it. Some people do have a flexible job, which is really nice. But I think it's always good to hear other points of view for how to do things and how to live your life. Like how can you make how can you get some of your time back rather than just, working for your time, just thinking a little bit differently that way. And my husband taught me a lot about that. And it just opened my eyes to something entirely different.
I agree with you. I mean, that's the reason why we all get into real estate is the freedom that it gives you, not even just the money, but just like buying back your time. Because when you're working in a job, you're trading your time for money, whereas later you're trading money for time, and you're essentially working in the business and get all your time back. Do you think that the podcasts and listen to Bigger Pockets that also helped a lot? Would you advise people to maybe just throw on podcasts in the car with their significant other?
If their significant other is on board or not on board.
Not on board, or just maybe not into real estate, but want to get into it.
I would say if they're open to hearing about it, yeah, why not? It's always good to hear other people's perspectives because a lot of I think podcasts are great because you're just listening to someone talk about what they've done, and even if you don't agree with it, you can still listen. So
Mm-hmm.
I think that's a great idea. Also, even if your partner or spouse is not, into real estate investing, I think just being an advocate and supporter is super helpful because you're going to need your spouse to be, on board when you're going into a big deal or, making major decisions like that.
Yeah, that's great advice. I agree completely. Nearing the end of the podcast now, I always like to ask a lot of good rapid fire questions. What advice would you give to someone who wants to get into real estate or has the fear of it? Or just if you were to go back in time and start all over again, what advice would you give to someone who's just starting out?
I would say get as much information as you need and then make a decision. I think that's how my husband and I differ is that my husband is more of a, so I'm more of a doer and my husband is like an information gatherer. So he'll gather all the information and he has all the numbers and he's totally a numbers guy, but I'm the one that says like, okay, let's just move. Let's do it. So you kind of need that, at some point there's just going to be like information overload and you don't want to make that, a hindrance to you taking action. And I would say the podcasts really help. Just kind of just do it. I mean, you never know until you really try.
It's impossible to figure out everything in the beginning. No matter what you read, no matter how many podcasts you listen to, nothing prepares you for the things that you actually go through in these deals and stuff like that. Besides Bigger Pockets, what's your favorite podcast or book?
Besides Bigger Pockets, well, I really like Rich Dad Poor Dad. That was like my first entrance into like what is this investing thing? Not just real estate, but just investing in general. And honestly, I'm not too much of a reader. I read a lot of career books.
Okay.
I like to read like things like kind of self-help books too, but I can't remember the last one. I think the last one I read was it might have been Lean In, that book by I can't even remember her name, but it's like a career book. I like to read those books that like improve you and like leadership type books.
What are you most excited for or biggest goals? Do you plan to try and look for another deal in 2025? Or what are you most looking forward to?
I really want to run this deal successfully first and really just get things going with the operations and the bookkeeping and make sure, I pay out my LPs and probably the first 5, 6 months, just kind of make sure operations are in order. And then I want to purchase another deal. So we really want a vacation lake house eventually. I don't know if it'll be this next one, but eventually we do. So I hope to purchase that eventually. If not, some type of short-term rental.
Okay. Well, you're going to do amazing, and I can't wait to have you back on the podcast after everything's going perfectly with the 12 unit after you acquire this lakefront property. If people want to get a hold of you, Addie, what's the best way for them to do so?
You can reach me on Instagram at Addie_invest. And yeah, that's the best way to reach me.
Well, everyone, thank you guys for tuning in to the Lowdown. I know I found a lot of value from Addie. She's amazing and badass, and I think we need to have more powerful women who are doing these things in real estate. Addie, thank you for hopping on the show, and thank you guys for tuning in. See you guys on the next one.